Well, hey there. Thank you guys for joining us. We're here to talk about the future of custody. I'm Marty Bent. I host the Tales from the Crypt podcast. Thank you.
Sup, freaks?
Sup, freaks. So we're here to talk about the future of custody. Bitcoin is obviously the first of its kind, and the fact that it's a digital bearer asset and the custody around this asset is something that we're discovering every day. I think we've got a great panel up here with Zach, Dhruv, and John from 3 companies doing custody in different ways. So I think the best way to start is how each of you individually are approaching custody, what you guys are doing as a company, and Zach, start with you.
Yeah, sure. So when we started BlockFi in 2017, we decided that custody was an area where we wanted to partner rather than build ourselves, so that we could focus on the financial services that we wanted to bring into the market and developing those. So we actually custody with Gemini and John today.
And all right, before we get into more on what you guys are doing, Dhruv, Unchained is doing something.
Do you want to follow up, John, maybe?
Yeah, sure. Yeah. So thanks very much, Marty. My name is John Reinhardt, and I work in corporate development at Gemini. For those of you who are unfamiliar with Gemini, we are a regulated digital asset exchange and custodian founded by Cameron and Tyler Winklevoss. And as we explore the future of custody on this panel, I think it's important to take a quick look back at Gemini's origins as a custodian. I mean, our business was really founded out of Cameron and Tyler's personal experiences when getting into this space. As they got exposure to this asset class, they were looking to solve the custody problem, not only for themselves, but also for the millions of users they would look to attract to Gemini. You know, our position is, as a third-party custodian, we understand that there's not one size fits all model. This is a very technical audience, and I imagine most of you actually self-custody, and given your proficiency in hardware and software wallets and with the technology as a whole, have gotten very comfortable in doing so, and we think that's okay. But our position is that as we shepherd in this new wave of retail and institutional capital and further promote the maturation of this asset class, we want to signal to the market that this industry deserves a safe, regulated, and trusted option, and Gemini will continually deliver on our promise to put security at the forefront of every decision that we make.
Awesome. Thanks for switching with me, John. I feel like I'm a little bit maybe a combination of what's happening on both sides. My company, Unchained Capital, we offer financial services, very much like BlockFi, loans and lending, but we also help our customers custody funds. And the reason we do both things is fundamentally because we view Bitcoin as magic alien technology that we somehow got a hold of and we don't really understand. And being forced to understand custody, being forced to operate with keys living at the edge of the network that our users have, that we don't have, but our users have, it's a powerful design constraint. It teaches us a lot about how to build a safer platform. If we weren't custodying, in our view, we wouldn't be learning as much, we wouldn't be able to iterate as quickly in our product development as compared to bearing that cost directly. That's not a choice that every team can or should make, but we're technologists and we're Bitcoiners, and owning keys is important to us as individuals. That's the direction we chose to go when we built our business.
Awesome. And so we're 10 years in, having been exposed to this digital bearer asset. We're learning. Where do we think we are now? And again, this is the future of custody, and do we see custody evolving going into the future? Are people going to be comfortable taking custody of their own keys and custodying themselves? Are they going to depend on third parties the rest of their lives? Or are they going to do a sort of mixed solution like Unchained offers with a multi-sig, where they have a third party helping them with an extra key if they need that signed? Zach?
Yeah, I think we're going to see a barbell, and on one end you'll have the concept of not your keys, not your Bitcoin, and people that want to take advantage of this unique property that Bitcoin has, which is that you are able to self-custody it. And then on the other end of the spectrum, or maybe at times for the individuals who do prefer to self-custody, you will give up self-custody in order to access certain services. So it could be the ability to buy and sell. In BlockFi's case, it could be the ability to earn interest on your Bitcoin, compound interest on your Bitcoin, and start growing your wealth. Or it could be to get a loan from someone like Unchained or BlockFi to access liquidity without selling your Bitcoin. So I think we'll continue to see things advance on both ends of that spectrum, and stuff in the middle might get a little bit left behind.
I might agree with that. I think describing it as a barbell is probably pretty fair today. I think a significant fraction of Bitcoin is self-custodied, but most Bitcoiners don't self-custody. Most people who have Bitcoin use an exchange or a custodial service like Gemini, Coinbase, many others. And indeed, most people who are obtaining loans and getting financial services in this space are asked to make that choice. It's either self-custody or it's use your Bitcoin. I don't like that choice. And I don't view that today's barbell is something that's healthy for Bitcoin. I think that there is a middle path, a third way, in which you share keys. And you can get loans and you can get financial services by preserving some aspect of key ownership. It shouldn't be an either-or choice. Now, that's harder to engineer, but it kind of goes back to what I was describing previously. If you force yourself not to have a choice about it, if you decide that you must have keys in the hands of your customers, you find that middle path. If you allow yourself to delegate custody to a third party, it's easier to live on one or the other end of that barbell. And I personally, with respect to my colleagues on either side of me at the moment, I personally think that either side of that barbell, while it's an important part of one's learning and maturation process, I started out with Coinbase, I moved to self-custody, now I'm in the middle. I've matured, and I think what I need is to be able to share keys, not just choose between either one of these two outcomes.
Yeah, I think that's a great point. The fact that you self-custody and feel that you need to share keys is probably given a lack of trust. I mean, think about how this industry over the last, 10 years has been plagued by exchange hacks, loss of funds, and everything like that. So how do you build trust in an industry that has been plagued by these exchange hacks and whatnot? And what Gemini does is we put regulation and security really at the forefront of what we do. I understand that regulation is not necessarily the most popular topic, but we think that if we're going to build trust and really start attracting more capital and injection into this space, we need to do something right. We need to be held accountable to our actions and our decisions. And I think that thoughtful regulation, given that we are a trust company, we're held to capital reserves not only in digital assets, but also in fiat currencies. We just underwent a SOC 2 Type 1 exam by Deloitte last year, which covers our custody business. So these are just certain ways that the public can get trust in going to someone like Gemini, because the minimum requirement for saying that you're a custodian and that you offer a cold storage solution is going to be a thing of the past. I think what we're trying to do is raise the standard and improve the infrastructure. On top of that, I would say is investment. What we need for the future of custody is to invest heavily in our infrastructure. Interestingly enough, when Cameron and Tyler went to found Gemini, even before we launched the exchange, we were building out our custody business. So they knew that they needed to really invest in order to build a next generation custodian. And what they did was they hired the best cryptographers in the business, along with some security professionals, and invested millions of dollars into our infrastructure. And I'll just touch on this briefly because it is somewhat boring. But what we do is our custody system is rooted in hardware security modules. And we have deployed, our keys are generated, stored, and maintained for the lifetime of the key on each of our respective HSMs. And we've deployed these throughout Tier 4 data centers in the continental United States. So we're not subjected to geographic risk, concentration risk. If we were to lose the entire East Coast in a hurricane, we wouldn't lose a single Bitcoin in customer funds. Alternatively, these data centers require biometric access scans, really serious levels of security. Is that the minimum requirement? No, but we feel that it's really important to build trust in the industry and be transparent in what we're doing. That's why we put our infrastructure on our website. It's why we're out here telling you where our HSMs are held, how we do this, that we employ true multi-sig. So we feel that really the future is predicated on serious investment and regulation.
Dhruv, for you in particular, what you guys are doing at Unchained with the 203 multi-sig, it's a very hand-on process with your users. Do you find an onus to help educate your users through this process? And so where are we in the education part of having people understand how to custody these assets?
That's a great question. I do think education is a huge part of what all our companies up on stage right now, and even everyone in attendance, it's our responsibility. Without education, we get scams, we get bad behavior, we get bad practices that make us all more unsafe, and ultimately, if we're being selfish, lower the price and adoption rate of Bitcoin across the globe. So education is hugely important. In particular, when we talk about custody, I think most people probably do still view it like it's a barbell. And I don't think that's why it's not mistaken to describe that as the current state of the world. That really is true for most people. They view it as a choice between, putting it on Gemini or having it themselves. And of course, we offer a middle path. That puts a huge burden of education on us. We have to teach customers about what multi-sig is, why we do, which we call collaborative custody, extends past a little bit past multi-sig and involves things like verifying your identity, being able to countersign with you in a way that makes you feel safe. We have to explain these degrees of freedom and the way of using this. Not to mention, and Tommy, talk about complexity, like I think there's a reason that this is a maturation process. People start with Coinbase or Gemini because it's a username and a password and a 2FA code, and these are things they understand, and they can do those things safely without making mistakes. They graduate over time to using a hardware wallet, and anybody who's done that remembers how confusing it was when you first started doing it. What do you mean Trezor doesn't have an account with my name on it? How do they even know how to? There's all these questions that you go through, and you learn eventually how that works. You build a mental model of it, and Unchained is asking you, great, do that once more. Like, do that twice, get a second hardware wallet, and give yourself all these great benefits. And for a lot of people, maybe they don't perceive why that's valuable, why that is worth doing, and I think that's okay. My company is not in a position where we can sell our product or even be useful to, frankly, most people who are in the Bitcoin space, because most people in the Bitcoin space simply don't have a lot of Bitcoin. It would be too much for them to invest all this time and energy into thinking about sophisticated forms of custody if they're protecting $100 of Bitcoin, unless they're really excited about custody just as a technology. Conversely, those who have been in the space for a while, who have held their Bitcoin for many, many cycles and have watched it grow by factors of 10, 20, that device in your hand starts feeling heavy. And you start to wonder if it's maybe the smartest thing to be just doing this all on your own. And so when you've reached that point, you're open to be educated. And you find a service like ours, and you can sort of see how this is the next logical development for certain people who are protecting funds themselves, but want some of the benefits of being able to work with someone who can help them in the event of loss or other kinds of tragedies. But yeah, this is a lot to learn, and it's a lot to educate. Not everybody comes to our site and immediately grasps all the things that they can unlock with this new mode of custody. We have to do education. And so things like this are really helpful because we get to talk about it. But I really think the biggest thing that educates somebody, I've often noticed this, is when they've carried a device and felt unsafe. If they've held a Trezor and they're like, oh, I feel so good because I'm self-custodying, and then they go through an international checkpoint in an airport, and they're suddenly like, oh my God, like literally they could take it from me, and then what would I do? And being exposed in that moment really teaches you the reality of what a single signature, as much as it's your keys, so it's safe, but that single signature is a single point of failure. So reaching that point of and having that feeling is a big part of what opens you up to be educated about how to get out of having that feeling. That's all I'll say.
Yeah. So Zach, with BlockFi deciding to use Gemini as your custodian, what were sort of the thoughts that went into your mind when making that decision? What was the trade-off that you were making in your mind?
Sure. So we felt that we were actually optimizing for security by choosing to work with a partner that had a track record that at the time, back in 2017, was on the path towards getting some of the things that John mentioned they now have in terms of insurance and SOC 2 compliance. And they also had very sophisticated user controls and settings, so we could take certain actions via an API, certain actions required multi-user authentication, et cetera. And I think that this concept of partnering with other companies who are really good at what they're doing is something that we're going to continue to pursue at BlockFi. We actually announced a couple of hours ago today that we have a partnership with Casa, who's another leader in the space of self-sovereign custody management. And today that partnership means one thing, but in the future we expect to further integrate our products and services with products and services like those.
Nice. Congrats on that.
Thanks.
So staying on, that's the beauty of Bitcoin too, and with multi-sig in particular, in my mind, is that you can get really creative with your custody solutions in the future. If you're a company and you want a 3 of 5 multi-sig setup with your business partners, you can make that happen where you only move Bitcoin when the business executors decide. What is sort of the most creative custody solution you see coming to the market in the future because of this ability that Bitcoin has?
I have like just something I might toss out. Something I'm really excited about in Bitcoin, which isn't real yet, is the idea maybe of thresholding or aggregate group custody of funds. So you can imagine N people putting funds into an address which is protected by some Schnorr signature or some other technology that allows that address to itself be multi-sig, but maybe one of the signatures to involve 100 people, 60 of whom have to cooperate in order to sign. Structures like that are really interesting for crowdfunding, for market making, for a variety of other structures that today have to be coordinated with software outside the chain that perhaps then syncs to it. That could be truly really futuristic way of thinking about custody, that it's literally just the entire record is in the blockchain, yet still very private due to the technology behind Schnorr and other stuff that's coming down the pipeline in Bitcoin. I'd be really excited to see some stuff like that land over the next few years.
I think one thing that we might see that could be really interesting is a concept of kind of like re-tokenizing Bitcoin. And I don't know if anybody's doing this. There was this thing that Compound did called like CDAI on the Ethereum blockchain, but think of someone keeping a lot of Bitcoins safe and then issuing tokens that are backed one-to-one by those Bitcoins that they're keeping super safe. And if you could get adoption on that, then you could start to do some of the things with Bitcoin in terms of implementing consumer protections that exist in the traditional payments industry. So you could have the concept of winding back transactions. You could have the concept of providing insurance to protect consumers from retailers who are selling them something, and then that thing doesn't work, or there's a broken promise there. And it would be a little bit of like two parallel systems, moving physical Bitcoin and moving this potentially tokenized Bitcoin in the future. But I think you might see some innovation in that area over the next 6 to 18 months.
Interesting.
Yeah, I would echo that statement. I don't really see, in terms of new custodians in the space, anything outside of the ordinary, but I think really some more of the features and access to liquidity that custodians can be able to still maintain their core infrastructure, but still provide the features and requirements of a trader in this space. So it's actually a difficult balance, because we never want to sacrifice security to be able to provide access to liquidity, quicker SLAs and whatnot. We've actually recently at Gemini, we've significantly improved our operational capacities without actually having to sacrifice our core infrastructure, and we're proud to be able to do things like that. We take feedback from our customers, we listen to the demand in the market, and so now we're operating on a 24-hour SLA with the same core infrastructure, multi-sig, through multiple cold storage sites that are geographically dispersed throughout the continental United States. We have no loan zones. Multiple people have to physically access these sites in order to have our HSMs authenticate and sign transactions, and we're still able to do that and maintain our SLA. So I think it's about finding a balance between what the market is demanding and then also still maintaining our core values in terms of being a security-first firm.
So as companies that are working and dealing with other people's Bitcoins, what are some of the biggest stressors that you guys have as custodians yourselves?
I pass off a lot of my stress onto John and his team. But yeah, I mean, look, it's we're regulated somewhat differently than crypto exchanges, but BlockFi and Unchained Capital are both regulated financial services companies by multiple different regulators, and so you have to think about everyone on your team, what level of access that they have, what circuit breakers you have in place if something were to go wrong with your web app or something else, and how you double check these things all the time. And that's not my area of expertise, but we have some really great people on the team who carry some of that stress for us.
Yeah, I feel the same stresses that Zach feels, I feel. And unfortunately, because our company also handles custody in a deep way, I have yet more stresses. So I would say in particular, I don't really worry these days as much anymore about core design of how do we construct addresses on the blockchain. Are we really sure that those addresses have all the properties we want them to have? Because we've been doing this now for many years, and Bitcoin is a really slow-moving conservative development target. It makes it really easy to develop this confidence. Where I do worry is because my company sort of uniquely has a failure mode that other companies don't, which is we really do let our customers have the keys. And so one of the things that stresses me out sometimes is if my customers are using keys and those keys are made by a given company, Trezor, Ledger, those are the two we support today, but we're interested in supporting more. I have to really worry about, well, when Trezor pushes something, that might break for a subset of users who are on Chrome, on these devices, their ability to sign in this way. Their coins are still fundamentally safe. Like, nothing has changed about what's happening on the blockchain, but their access to it is impeded. And that's really frustrating for me. I can't control every aspect of it because it's not just a username, password, and 2FA code on my website that is responsible here. There's a complex coordination between my website, their key, the manufacturer of the key, that just increases our testing surface area. And I think one of the things that our team has actually been working on is try to open source kind of a net testing package, sort of a health and wellness check for the state of all hardware wallets that we're going to be interoperable with. And the idea would be to release this and turn it into like a public resource so that anybody who wants to develop against hardware wallets can basically see a matrix and see like browser, operating system, the task you're asking from the wallet, for example, export a public key, create a signature, the versions of all the firmware, and so you can sort of get this window of what's green and what's red, and when something is red, everyone in the ecosystem can have a sort of place to go, like, okay, Ledger is going to publish an update which will fix Ethereum signing on Firefox browsers in the next 3 days, and so that can become a thing that we can all point at, because today, unfortunately, I have to bear that burden. When there is an issue, our company has to do the work to tell our users, hey, this thing is happening, it's a known Ledger issue, you're going to see this behavior, and it's just more work for us. Again, something that would be easier if we had just delegated this and let someone else handle it, but in a way, almost we are. We're letting the key manufacturers, Trezor and Ledger, handle a bulk of this work. The problem is we're not as well in sync with them because there's so many companies that are using their product, and they're just pushing out changes. They're not necessarily aware of every possible way that those changes are being utilized. So again, in terms of worries, where I tear my hair out is I want to support more and more key devices, yet I feel like it just opens me up to a greater and greater testing and QA workload, yet I still want to do it. So these are the costs you bear, I guess.
Yeah, I'd like to revert back to, Dhruv, your point about education, because education is paramount in terms of security in this industry. So, as I mentioned before, I'm sure many of you are comfortable self-custodying given your technical proficiency in this asset class, and that's great, but how often do you hear in the media, when is the next wave of retail customers going to enter the space? When are the true traditional finances and institutional capital going to enter in? And when they do, this is fundamentally different and more complex in terms of maintaining your assets and also the assets on behalf of your customers. You have a fiduciary responsibility to your customers, so that becomes even more complex. So education is really key. So what Gemini does is, we try and stay ahead of the curve. We've just implemented recently U2F, Universal U2F via WebAuthn, so now customers can register their hardware security keys to safeguard their exchange accounts. We have very rigorous whitelisting procedures. We've secured commercial crime insurance in excess of our hot wallet. Aon was the broker of that. So, we're continuing to trying to stay ahead of the curve and always make sure that, I know I'm coming back to this theme again of security, but education and security need to kind of come together as we bring more people into this asset class, and as they get exposure, we want to make sure that everyone's safe because the industry can't suffer, further exchange hacks. There needs to be consensus on minimum acceptable standards and lengths that custodians are willing to go to safeguard their customers' funds.
Yeah, I have a follow-up question for John, actually. I didn't realize that you guys did that. That's really cool. So you allow customers to upload, I don't know, like a YubiKey or something like that, is that right?
You can register that on your
Cool, so they
Gemini.
have a stronger ability to authenticate their account because of a key that they own. That's a great first step. Would you guys ever consider letting them actually hold a key in the quorum which protects their Bitcoin? Or would you view that as a degradation in your security?
So we view that as a degradation in terms of security. I understand your position in terms of shared keys, but we will maintain the position that we are a native crypto company, and it's not that we want to say to the market, we know best. Of course not, but we do feel that we've gone through significant measures to come up with the system that we have today, and we feel most comfortable in not sharing that risk with our customers, and nor should the customers really feel that they should have to take on that burden from us. We feel like we've invested heavily in this space and in our infrastructure, and that we're in a good position to lead and secure our customers' digital assets without having them to take on any of that additional risk.
All right, so we got 3 minutes here, I guess. Last question, since is examining the future of custody. Let's go 30 years into the future, post-hyper-Bitcoinization. What does the landscape of Bitcoin custody look like? Are individuals holding a good portion of their coins themselves and keeping percentage with a custody provider? Are most people holding their keys? What do you guys think?
I think a lot more people will be earning interest on their Bitcoin than are today. If we fast forward to a world of hyper Bitcoinization, I think a lot of adoption would have to occur in the interim, and you could find ways to combine not only secure storage but also kind of time-tested lending models that enable people to not only securely store their wealth however they want, but also grow it. So that'd be my prediction.
I think I have this like vision in my head of like today Bitcoin is like a lot of Scrooge McDuck like mini mansion vaults that are like spread out in various places, and then there's lots of individuals that are in the barbell metaphor, right, who are on the other side of it. And again, I keep repeating this, but I really do view like the path that Unchained takes as the more correct, perhaps longer term view. Maybe we're a bit early in it, but in 30, 40 years, yeah, I imagine that each of us is in many, many different quora. We are in quora at work with people who are in the same group, just maybe to spend petty cash at the office. We are in quorums with our family that we use to protect our inheritance. We are in quorums with our friends for fantasy football leagues. And all of this is really easy because it's 30 years from now, and these are people who grew up with Bitcoin, and they have the benefit of all the better interfaces that everyone at a conference like this is helping to make real. And in that universe, custody doesn't feel like the barbell. It feels like there's a mesh or a network or a foam in which everything has been spread out, and it strikes me almost as the difference between a monoculture, if you want, like, and a more heterogeneous, like, wild crop, right? Like, instead of having one system that if you can figure out how to get into that one really, really big money bin, oh man, like the things you could get from it, as compared to that, like everything's just spread out. If you break one quorum, that's the only quorum you've broken. The keys are, not all Bitcoin is in that quorum. There should never grow a quorum so large that breaking it could be catastrophic to Bitcoin. But creating that world is really hard. I don't know.
Sure, yeah, I know we're running out of time, so I'll be brief. You may have seen our marketing campaign, our crypto bus around here, and it's wrapped with words that say the revolution needs rules and crypto without chaos. So we're really trying to, as we progress this industry, Gemini is really trying to set the standard for security, and we feel that in the next 30 years, as we see a lot more capital injection into this space, that basically there's going to be a lot more comfort in this industry. Right now, Bitcoin as a payment hasn't been so viable given its volatility, but Gemini is always going to try and ensure that, as there are additional features, lending your Bitcoin, earning interest on it, people want to use this, and we're always, at least our promise to you is that we try to build the future, or build the bridge to the future of money. And so whatever Bitcoin looks like in 30 years, I can't really say, but Gemini feels like we're going to be well positioned to kind of help shepherd us into that new digital age.
All right. Thank you. I think we're going to toss it to questions now.
We didn't have any questions.
Boss, I guess we're done. Gentlemen.
Yeah, we're done. Unless you want to submit some questions.
All right, thank you.
Thank you.
Guys.